Hey everybody, welcome to my channel. Hope you guys are all doing well. In this video, I'm going to bring to you guys another Polkadot project called HydraDx. It's part of my ongoing initiative to introduce Polkadot projects to my audience. I still think there's tremendous opportunity out there. I think the really big gains won't come until projects are deployed as parachains and they go live. And if you're interested in watching some of the past review videos I've done on Polkadot Plays, I've consolidated all those video reviews into a playlist for you guys, and you can find that playlist in the description below. And if you're fishing for Polkadot gems and you want to communicate with like-minded individuals, I welcome you guys to join my private Discord channel. A lot of the alpha that I get that leads me to finding these gems months to years ahead of the general public tends to be sourced from scouring Discord channels. So by joining a few Discord channels, you're probably ahead of 95% of the crypto investors out there. Or if Discord isn't your thing, at the very least, you guys should give me a follow on Twitter. It'll help you keep up to date with the market and you'll get insights into which projects I'm interested in. The links to both my Discord and my Twitter profile can be found in the description below. With the intro out of the way, let's go ahead and dive into this video. Alright, to get this video started, HydraDx is going to be a cross-chain liquidity protocol built on Substrate. For those of you guys that are a little bit new to Polkadot, Substrate is basically a framework created by Polkadot, and it provides projects an easy way to build a customized chain. It's built to make it easier for these projects to then become a parachain on Polkadot. There are other liquidity protocols out there like Balancer, Uniswap, SushiSwap, Bancor, and Thorchain. Out of all the liquidity protocols I've mentioned, only Thorchain was built from the start to be cross-chain compatible. However, with the competition eating up, SushiSwap, Bancor, and Balancer are all making moves to support the trading of cross-chain assets. Now, the advantage that HydraDx and Thorchain have over all the other projects is that they're building their own base layer, which gives them more flexibility to make customizations and tweaks to certain parameters, which in the long run could end up being a huge advantage, seeing that these other liquidity protocols, for example, the ones that are built on Ethereum, would inherit Ethereum's structural limitations and weaknesses. For instance, if Ethereum doesn't scale on time, it could potentially end up being a huge bottleneck to liquidity protocols that are built on Ethereum, because it'll give time to projects like HydraDx and Thorchain to eat up a significant portion of the market share and also to establish network effects. Here are some of the key features that you can expect. As I mentioned earlier, it's going to support a multi-asset liquidity pool, and I'll expand on this in a minute. It's very nuanced from pools that we've seen in the past, and since they're deploying on Polkadot, they're going to be interoperable with other chains. And the feature that I really like is the fact that it's going to be open source, and it's going to be governed by its community of users, liquidity providers, and validators. And you could tell that they're very serious about their community-centric approach. Unlike other projects which allocate massive amounts of token to early investors in the founding team, they've only allocated 15%. The rest of the token supply is reserved for anybody who wants to participate in the network. In other words, it's going to be allocated to expanding the network, therefore increasing the likelihood that it becomes widely adopted. And as I mentioned earlier in the video, their model is very nuanced from traditional automated market makers that you see on Ethereum like Uniswap and Balancer. If anything, it's probably the most similar to Bancor's model. Bancor also uses its token as a base pair for all the assets locked in the pools and subsidizes impermanent loss protection by inflating the supply of their token. Unlike Bancor, HydraDx doesn't have different pools for all their assets. In fact, they have one pool for all the exogenous assets that are deposited into their network. The core idea is to have a base asset, HDX, which is minted and held by the protocol. This asset will represent 50% of the initial value of the liquidity pool. The other 50% of the initial value is provided by liquidity providers in exogenous assets. The 1-to-1 ratio is kept logarithmically. As assets are added or withdrawn, native tokens are minted or burned accordingly. So basically you have liquidity providers on one end and you have HDX tokens which are supplied by the protocol on the other end. If I deposit $10 worth of DOT tokens into this side of the pool, the protocol will mint $10 worth of HDX and deposit them into the other side of the pool. And since all exogenous assets are pooled together, it increases capital efficiency. And since the liquidity isn't scattered around in various pools, In theory, this should massively reduce the slippage. And if this model actually works, it's going to make it very appealing for liquidity providers, because this means you don't have to provide liquidity in two assets. You can inject a single asset into the Omni pool. Assuming that they have very little or no impermanent loss, this feature could make them a magnet for liquidity providers. Now, if everything goes to plan, they're hoping that their protocol can provide deeper liquidity, lower slippage, internal composability, and better execution. And here are a few reasons why they decided to use Substrate as a base for their platform. It allows them to immediately scale on deployment. They'll be interoperable with other chains. They'll have the ability to outsource infrastructure components. They'll be more nimble and upgradable. They'll have shared security and a greater community. Now, shifting over, let's talk about the tokenomics. This is my favorite topic to cover because a lot of the tokens that you see out there, they're only going up because of pure speculation. If a token is going to be successful in the long run, I agree full-heartedly with the team that it has to have meaningful value accrual. If the protocol creates and captures value, it needs to be directed to those holders who are actively participating to the success of the protocol. Also, the token needs to have some sort of utility, a meaningful purpose that enhances the protocol and doesn't create friction. And they want to have a certain level of stickiness to the protocol. If they're giving these liquidity mining incentives to bootstrap liquidity, they want that liquidity to stick around even as incentives wane or go to zero. And lastly, it's important to have optimal distribution. There's been so many projects in the crypto space where VCs and early investors get the lion's share of tokens. Once there's enough liquidity on exchanges, they end up dumping their tokens on retail. So it would be ideal to get these tokens into the hands of individuals that are here for the project's long-term success. And for those reasons, they've decided to allocate 75% of the supply to liquidity miners and stakers. And for those of you guys who weren't able to buy tokens on the balancer, make sure you guys keep an ear out for StakeNet, because it might be your last opportunity to grab some tokens before they go mainnet. Now, despite having good ethos for tokenomics, I still don't see how their token is going to capture value from the growth of the network. And since they've allocated 75% of the token supply to liquidity mining and staking rewards, and on top of that, by building on Substrate, they're going to have the ability to make structural changes to the protocol. I think the odds of them tweaking their model and some of their features a little bit to help the HDX token accrue value is very high. I mean, if you take a look at Bancor, they recently announced phase 2 of the Vortex, which basically takes a portion of the fees generated by the protocol, uses it to buy the BNT token, stake it, and then they proceed to burn the VBN token. So in other words, they're basically using protocol fees to buy BNT off the network and permanently stake it into the Bancor pools. That reduces the amount of BNT that's circulating and also helps to bid up the price. And given the ethos of the HydraDx team, I think it's just a matter of time before they pursue a strategy to achieve the same ends that Bancor did. Now let's talk about who's funding the project and who are the managing partners. A lot of the early funding came from Z Prime Capital, and this VC group tends to buy tokens for the long run. They stake, they run nodes, and they're focused on buying equity or tokens that have a meaningful value accrual. Their portfolio includes the following projects, and in my judgment, a lot of these are high quality projects. I'm not familiar with all of them, but I do know a lot about Thorchain, Polkadot, Akala, Diversify, Zapper, Opium Network. In my view, all of those are solid projects with a lot of potential. So I take it as a very good sign that this VC group is an investor in HydraDx. And you can check out the Twitter profiles of all the managing partners by clicking on them here. The two that I'm most familiar with are Maddie and Fisk. And that's largely because I follow them on Twitter and I listened to one of their podcast interviews on Uncommon Core, where they sit down with the CEO and founder of Three Arrows Capital, one of the leading trading firms in crypto, and Hasu, a crypto researcher and writer. Now, to end the video, I'm going to give you guys my closing thoughts. Full disclaimer, I do plan to invest in this token when I do get the opportunity. And it's partly because of my bias. I think that AMMs are going to be the base layer of DeFi. I think DeFi in general has a lot of redundancies, and a lot of these redundancies can be reduced by deploying more services on top of AMMs. And I think that's why a lot of these AMMs have a long game of adding financial instruments to the protocol. For example, HydraDx plans to add options, lending, derivatives, synthetics, which in my mind makes a lot more sense. You establish and you build a lot of liquidity. Once you have a working model that lures in liquidity and that's able to retain that liquidity, you then can build financial services on top of that. And I really like the ethos of the team. I think any team that promotes decentralization, open source, and that has a community-centric focus will ultimately win in the long run. And the project for the most part is relatively unknown, so I have a feeling that I'm getting in pretty early, even though I wasn't able to participate in the balancer sale. And lastly, I think this Polkadot mania is just beginning. We haven't even seen any of the parachains go live. I think once those parachains go live and Polkadot starts auctioning off parachain slots, a lot of these tokens and projects are going to just take off. So my goal is to buy tokens ahead of that happening, because many of these new investors that are pouring into the system, they're going to be buying tokens purely on strong narratives. And I have a feeling that a lot of AMM protocols are going to do well in the coming months. I'm pretty sure Bancor, Uniswap, SushiSwap, Thorchain, and all their respective tokens are going to produce significant returns for their investors. And these new investors are going to look at those returns and they're going to seek out projects that could potentially give them the same returns. And assuming that Thorchain is wildly successful, I could easily see retail investors calling HydraDx the Thorchain of the Polkadot ecosystem. Now, based on new inputs, I may change my view on the project. And if you wanted to keep up to date, make sure you guys at least follow me on Twitter. But if you wanted information in real time, by joining one of the lower tiers I have on Patreon for just $20 a month, you'll get access to all my private Discord channels where I'll give you guys my moves in real time. And if you're coming into this market a little late, or you feel like you're behind and you want to expedite your learning, by joining one of the higher tiers, you can even get access to me one-on-one. If you feel like any of those services can help you or benefit you in any way, make sure you guys click my Patreon link in the description below. With that, I hope you guys enjoyed this video. This is CryptoOneStop signing out. I'll talk to you folks next time. Bye.